Today we shall see how the second PUC accountancy question paper would be in the annual examination. Let us solve a preparatory exams second PUC accountancy question paper. This year, due to COVID, some extra questions are added in section A, 2 more questions are added in section B. There is no addition. In section C there is addition of 1 question, and in section D there is addition of 1 question, and in practical oriented question there is addition of 1 question. So without wasting the time, we shall try to solve the whole question paper. I have uploaded question paper as well as its key answer. Its key answer I have typed just in 2 pages. You can download it. Link is given in the description below. In section A there are 12 questions, out of which you have to answer only 8. Each question carries 1 mark. Question number 1 is donation for specific purpose are always dash. So you have to fill in the blank. So here in the blank you have to write are always capitalized or capital. Question number 2, the agreement between the partners should be in. There are 4 alternatives. Correct choice is oral or written. Question number 3, name any one content of partnership deed. The answer is there are so many contents, you have to write only one. The answer is name of the firm or name and address of the partners. Question number 4, there are 2 methods by which the capital account of partners can be maintained. You have to state whether it is true or false. Answer is true. Question number 5, give the formula for calculating gain ratio. So you have to write the formula for gain ratio. The formula for gain ratio is equal to new ratio minus old ratio. Question number 6, amount due to deceased partner is settled in the following manner. You have to write the correct answer. The correct answer for 6 is all of the above, because A, B and C, all the methods are followed to settle the deceased partners. So therefore answer is all of the above. Question number 7, dash is the minimum number of members in a public company. Answer is 7. Then question number 8, expand DRFI. Answer is debenture redemption fund investment. Question number 9, fixed assets are classified as tangible and dash asset. Answer is intangible asset. Question number 10, comparative statements are also known as. Here 4 alternatives are given. The right answer is horizontal analysis. Question number 12 is give an example for cash inflows from financing activities. Answer is issue of debenture or issue of shares. Anyone you have to write. Now we shall come to section B, where 8 questions are asked. Out of 8 you have to answer 5. Each question carries 2 marks. Question number 13, give the meaning of receipt and payment account. So here you have to write the meaning of receipt and payment account. It is a summary. Receipt and payment account is the summary of the cash book. It records all the receipts and payment irrespective of period and nature of the transaction. Question number 14, what are the methods of maintaining capital account? There are 2 methods of maintaining the capital account, that is a fixed capital system and fluctuating capital system. Question number 15, state any 2 rights acquired by a newly admitted partner. First right is right to share in the future profit, and second right is right to share in the assets of the firm. Then question number 16, give the journal entry for an asset taken over by a partner on dissolution of a firm. So here you have to write the journal entry. So journal entry is partner's capital account debtor to realization account, and you have to write narration also. Then question number 17, state any 2 features of company. So there are a number of features of company. You have to write any 2 features. For example, it is an artificial person. Company is an artificial person, and then it is a registered body, etc. You have to write any 2. Then question number 18, mention any 2 items which are shown under the head reserve and surplus, you have to write any two heads which are shown in the reserve and surplus. For example, securities premium, general reserve, surplus, etc., etc. Then list any two techniques of financial statement analysis. There are 4 techniques. Out of that, you have to write any two: comparative statement, common statement, etc. Then what is cash flow statement? Cash flow statement is a statement which shows the inflow and outflow of the cash. Now we shall move on to the section C. In section C, 8 questions will be asked. Each question carries 6 marks. We have to answer any 4 questions. Question number 21 is on the preparation of profit and loss appropriation account. So draw the format of the profit and loss appropriation account. So here 2 partners are there, Sudha and Prashant. They have started partnership business on 1st April 2020 and their capital is 1 lakh and 80,000 respectively. They are sharing the profit and losses in the ratio of 2:1. And for the year ending 31st March 2021, they have earned a profit of rupees 45,000. Before allowing some adjustments which are given below, you have to show it in the profit and loss appropriation account. Prepare the profit and loss appropriation account. First record the current year's profit on the credit side by P&L account 45,000. And then see the adjustment number A, interest on capital at 6%. It has to be debited to the P&L appropriation account because it is a loss to the firm. So it should be debited on the in the P&L appropriation account. So on debit side to interest on capital, Sudha 1 lakh into 6% means it comes to 6,000, and Prashant 80,000 into 6%, it comes to 4,800. So total would be 10,800. So show it in the outer column. Then adjustment number B, interest on drawings, Sudha 1,000 and Prashant 800. It is an income to the firm. So therefore record it on the credit side of the P&L appropriation account by interest on drawings, Sudha 1,000, Prashant 800, total 1,800. Then adjustment number C, yearly commission of Sudha is rupees 600. To Sudha they are paying 600 rupees commission per annum. So therefore record it on the debit side. It is an expenditure to the firm. So record it on the debit side. Sudha's commission for full year is 600. Likewise, Prashant is given 1,000 rupees salary every month. So it is also an expenditure. Record it on the debit side. To Prashant's salary into bracket 1,000 into 12 in outer column 12,000 rupees. Now drawings are given. It is not necessary here. We are not supposed to record it in the P&L appropriation account. It is recorded in the partner's capital account. Sometimes just to confuse you, drawings would be given. If suppose interest on drawing we have to calculate, then we have to use the amount of drawings. Otherwise there is no need of amount of drawings. Even then it is given, you just ignore it. And now total each side, debit side as well as credit side of the profit and loss appropriation account. If you total, credit side would be more, it comes to 46,800. Record it on both the side, find out the difference, and difference is 23,400. Since credit side is more, this is the net final profit. It has to be distributed among the partners as per the profit sharing ratio, that is 2:1. So therefore 2 partners capital account, Sudha it comes to 15,600, Prashant it comes to 7,800. So likewise we have to solve this profit and loss appropriation account. There will be 6 marks for this question. Each item carry 1 mark. Remember, in examination, if you write all the 6 items correctly, then you will get 6 marks. Okay. Next, question number 22. Question number 22 is on interest on drawings, calculation of the interest on drawings under shortcut method. So here Ram is a partner and he has drawn rupees 2,000 every month, and the rate of interest is 12%, and 2 conditions are given. Condition number A is if he withdrew the amount at the beginning of each month, what would be the interest, and condition number B is if he withdraw rupees 2,000 at the end of each month, what would be the interest we have to calculate. First let us see, if he withdraw in the beginning of every month rupees 2,000, first you have to write the formula. There will be 1 mark for formula. So formula under shortcut method is IOD, or interest on drawings, is equal to total drawings into average period into rate of interest into unit. Unit means 1/12. So now we shall see here interest on drawing is equal to total drawings, means every month he is withdrawing rupees 2,000. For 12 months he drawn, it means 2,000 into 12, it comes to 24,000. And then average period, how to calculate average period? To calculate the average period, we have to consider maximum months outstanding and minimum months outstanding. If a partner withdraw at the beginning of each month, the maximum month outstanding would be 12 and minimum would be 1. So 12 plus 1 is equal to 13 upon 2 means it comes to 6.5. You have to just remember it. Then 12 upon 100 into 1 upon 12, it comes to 1560. On the other hand, if he withdraw rupees 2000 at the end of each month, then the formula is same. Interest on drawing is equal to total drawings into average period into rate of interest into 1 upon 12. Here only the average period changes. 24,000 is the total drawings into 5.5 because he is withdrawing at the end of each month. First drawing there will be outstanding months of 11. 11 months would be the outstanding, and the last drawings there will be 0 months. So 11 plus 0 is equal to 11 upon 2 is equal to, it comes to 5.5. So average period is 5.5 into 12 upon 100 into 1 upon 12 is equal to 1320. So here 3 marks for each condition will be allotted. Then question number 23. So here you are asked to find out the sacrifice ratio. So first of all, we have to see what is the old ratio. Old ratio is the 4:3, and old partners are Mohan and Rohan. Then they admitted Kishore, and new profit sharing ratio is 4:7:3. So to find out the sacrifice ratio, we have to write first the formula. Sacrifice ratio is equal to old ratio minus new ratio, and we have to find out the sacrifice ratio of the only old partners, that is the Mohan and Rohan. Let us find out the sacrifice ratio of Mr. Mohan. So sacrifice ratio of Mohan is equal to his old ratio is 4/7 minus new ratio is 7/14. Then find out the LCM. LCM would be 14. By applying the LCM, if you sum up, it comes to 1/14. Likewise, sacrifice ratio of Rohan, his old ratio is 3/7 and new ratio is 4/14. So 3/7 minus 4/14. Here also LCM is 14. When you simplify the answer, when you calculate, answer will come 2/14. So therefore, sacrifice ratio of Mohan Rohan is equal to 1/14 is to 2/14. Cancel 14. The answer would be 1:2. So here the allotment of marks will be 1 mark will be given for formula and 1 mark for answer, and remaining 2 marks will be allotted for the calculations. Means for Mohan's calculation 2 marks and for Rohan's calculation 2 marks. In this way 6 marks will be allotted. Question number 24. Question number 24, here you have to prepare deceased partner's capital. A is the deceased partner. So draw capital account of the A. So then after drawing the capital account, first you record the opening balance of the A at the time of death. So here it is given in the problem, A, B and C are the partners. They are sharing the profit and losses in the ratio of 2:1, and their capital balance on 1/4/2020 stood at rupees 1,50,000, 1 lakh and 50,000 respectively. Out of these 3 partners, A died on 1st January 2021, means after starting of the accounting year. He died after 9 months. He died. So therefore, that period we have to consider while calculating some amount. So and partnership deed provides the following. According to partnership deed, what else we have to pay to the deceased partner is given here. So what you have to do is first you draw the profit and you draw the capital account of A. A is a capital account, and write down his opening balance of the capital. It is given in the question. It is 1,50,000. So therefore, by balance brought down 1,50,000. And as per the partnership deed, he is entitled for interest on capital. So it has to be credited to his account. So write by interest on capital into bracket. His capital is 1,50,000 into rate of interest is 9/100 into he survived for 9 months. So therefore, we have to give him interest only for 9 months. So therefore, into 9/12. It comes to 10,125. Then he is entitled for a salary of rupees 1,000 per month. So we have to give him salary of rupees 1,000 per month for 9 months. So therefore, by salary 1,000 into 9, it comes to 9,000. And then A is share of goodwill. We have to credit his goodwill. So his goodwill is given below. So the goodwill of the firm is 50,000. Total goodwill of the firm is 50,000 rupees. So out of that, his share would be 50,000 into 2/5. It comes to 20,000, and this 20,000 would be contributed by the continuing partner, that is B and C, as per the gain ratio. If the gain ratio is not given, the old ratio of the old continuing partner would be the gain ratio. So old ratio is here 2:1. So therefore B and C contribute 20,000 in the ratio of 2:1. It comes to 13,333 and 6,666. Therefore by B's capital 13,333, by C's capital 6,667. Then his share of profit up to the date of death. So he gets share in the accrued profit. So accrued profit for 9 months have to be calculated. Here the profit of the last year is given 24,000 per 12 months it is, then it would be 18,000 per 9 months. Out of 18,000 he will get his share, means 2 upon 5. So that would comes to rupees 7,200. So that would be recorded as by P and L suspense account. After recording all the entries, you have to total each side. So credit side would be more, it comes to 1,96,325. Record it on both the sides, find out the difference. The difference will be 1,96,325 and that has to be transferred to his executor's account. So therefore write to A's executor account. Then question number 25. Question number 25 is on the issue of debentures. You have to pass the journal entries. Here the name of the company is Krishna Company Limited. First you write the name of the company at the top and then you draw the journal format. So here 10,006% debentures of rupees 100 each are issued and payable rupees 20 on application, 30 on allotment, 50 on first and final call, and you have to pass the journal entries up to the stage of the first and final call money received. Means you have to record 6 journal entries. The first journal entry is for the receipt of the application money. So journal entry is bank account debtor to 6% debenture application account. Amount comes to rupees and 10,000 into 20 means it comes to 2 lakhs, and you have to write the narration also for application money received. Then second journal entry is for transfer of the application money to the debenture account. So journal entry is 6% debenture application account debtor to 6% debentures account, amount 2 lakh narration for transfer of the application money. And third journal entry is for the allotment money due. Journal entry is 6% debenture allotment account debtor to 6% debenture account. Amount comes to 10,000 debentures into 30 rupees means 3 lakhs. Then fourth journal entry for the receipt of the allotment money. Journal entry is bank account debtor to 6% debenture account. So here full amount is received. So therefore the same amount 3 lakhs we have to record and then write the narration. Then fifth entry is for first and final call money due. The journal entry is 6% debenture first and final call account debtor to 6% debentures account. The amount is 10,000 debentures into 50 rupees. It comes to 5 lakhs. So record debit side 5 lakhs and credit side 5 lakhs. The last journal entry for receipt of the final call money bank account debtor to debenture first and final call account 5 lakhs and record the narration. So here for each entry there will be 1 mark. Then question number 26. Question number 26 is you had to prepare the statement of profit and loss for the year ended 31st March 2021. So draw the diagram of the statement of profit and loss. As per the Companies Act, you have to prepare the statement of profit and loss. So therefore draw the diagram, draw the format. So in the format, first column is the particulars, second one is the note number, and third one is the amount. So here 2 sections will be there, one income section and the second one is the expenses section. In the income section, first we have to record revenue from operation. So revenue from operation, so here revenue from operation is not given directly. We have to find out the revenue from operation by preparing the note. So note number 1, you can see the note number 1. So sales are given here. So sales means cash sales as well as credit sales are given. So cash sales is 2 lakh and credit sales is 3 lakh, as well as sales return is also given. First you total cash sales and credit sales, it comes to 5 lakhs and less sales return 20,000, it comes to 4 lakh 80,000. That would be the revenue from operation. So therefore you write revenue from number 1, revenue from operation, note number 1, 4,80,000, and number 2, other income, there is no other income, so the total revenue will be 4,80,000. Now second section is the expenses. Here what are the expenses given, that much only we have to record. First, cost of material consumed is given, so if write for number 1, cost of material consumed 3 lakhs. Then depreciation and amortization, it is not printed here, I have given on the side of the problem. You have to depreciate building and machinery at 10%. So you prepare a note. So note number 2 is prepared. See here, depreciation on building at 10% means it comes to 20,000, and then depreciation on machinery at 10%, it comes to 15,000, total 35,000. So therefore number 2, depreciation and amortization, note number 2 is equal to 35,000. Then bad debt comes under the other expenses. You need not have to write the note just you can directly write the other expenses. In that you take the bad debt is rupees 5,000. So the total expenses is 3,40,000. If you deduct total expenses B from total revenue A, the profit before tax would be 1,40,000. Calculate tax at 30% given in the question, it comes to 42,000. If you deduct 42,000, the 98,000 will be the profit after tax. So here marks would be allotted item wise. So note is also there. So for note also marks would be allotted. Question number 27 is about the calculation of the current ratio and the quick ratio. All the informations are given directly. First write down the formula for current ratio. Current ratio formula is current assets upon current liabilities. Here current asset is 2,40,000 upon current liabilities 60,000. It comes to 4:1. Then quick ratio. For quick ratio, formula is quick assets upon current liabilities, but quick assets are not given. We have to calculate. How we have to calculate? Quick assets is equal to current assets minus a stock. So 2,40,000 minus 1,20,000, it comes to 1,20,000. Then quick ratio is equal to 1,20,000 upon 60,000, it comes to 2:1. So this is the question number 27. Then question number 28 is about the cash flow. So here we have to calculate the financing activities. First one is the equity share capital. In the year 2020, there was 28 lakh, and in the year it is 35 lakhs. So first you draw the format of the cash flow. Number one is here equity shares are issued because in the last year equity shares was 28 lakhs. Now in the current year it is 35 lakhs, means there is a difference of 7 lakhs, means 7 lakhs extra equity shares are issued. So therefore number one is proceed from equity shares issued is 7 lakhs into bracket 35 lakhs minus 28 lakh. Then number two is the bank loan. So earlier it was 12,50,000, now it is 7,50,000, means there is a repayment of the bank loan. So therefore repayment of the bank loan 12,50,000 minus 7,50,000, it comes to 5 lakhs. Then debentures, earlier 8 lakhs, now 10 lakhs are there. It means there is a issue of the debenture. So therefore proceed from issue of debenture into bracket 10 lakhs minus 8 lakhs, it comes to 2 lakhs. Then the final amount will be 4 lakh. It is called cash inflow from financing activities. So by this section C over. Now we shall move to the section D. So here 8 questions will be asked. You have to answer any 4 questions. Question number 29 is on the income and expenditure account. So prepare the income and expenditure account. First we shall to see the receipt side of the receipt and payment account. So to subscription 24,000, it is given in the receipt and payment account. So here on the income side you take by subscription 24,000 in the inner column. Then there is a outstanding of rupees 1,200 in the last year. It is given in the opening balance sheet. You have to deduct it. You have to less it from the subscription. So less outstanding subscription received in the outstanding subscription of the last year 1,200. It comes to 22,800. Then in the additional information adjustment number C. Subscription received for the year 21-22 was rupees 1,600. It is the subscription received in advance. It is not the income of the current year. It is the income of the next year. It has to be deducted from the subscription. So therefore less received in advance 1,600. It comes to 21,200. Then again adjustment number A, adjustment number B, subscription receivable for the current year is 800 rupees. That should be added. So therefore add outstanding for the current year 800. Then it comes to 22,000 rupees. You record it in the outer column. Then other incomes are entrance fees. So about entrance fees and donation, instruction is given half of the amount has to be capitalized. So you take only half of the entrance fees 2,000. And then sale of the newspaper 2,000, and then sundry receipt 1,200, and half of the donation 4,000. Now we shall come to the expenditure side. To record the expenditure side, you see the payment side. So there is a rent of rupees 4,800 recorded in inner column because there is a adjustment. So adjustment of rupees 400. So in the opening balance sheet, there is a 400 rupees outstanding rent in the last year that has to be deducted from the 4,800. So less outstanding of the last year 400, it comes to 4,400. And then again there is a adjustment number A. For the current year 600 rupees still payable, so add it, so plus it. So when we add it, it comes to 5,000 rupees. Then printing 2,400, office expenses 5,600, and then books what? It is the capital expenditure, investment capital expenditure. Now come to the adjustment. Adjustment number A is considered, B is also considered, C also considered, D is also considered. Now last adjustment, depreciation on books at 10%. So books in the last year 28,000, so charge depreciation on 28,000 for full year. So therefore depreciation on books is equal to I have written below 28,000 into 10 upon 100, it comes to 2,800. Then again in the current year they have purchased books of rupees 20,000 on September 30. It means it is used in the current year only for 6 months. We have to charge depreciation only for 6 months. So it comes to 20,000 into 10 upon 100 into 6 upon 12 means 1,000. So total depreciation comes to 3,800. Then total both the side, then total each side, debit side as well as credit side separately. See which side is more here. Credit side is more, means income side is more. Record 31,200 on both the side and find out the difference. The difference comes to 14,400 because the income is more than the expenditure. It is called as a surplus. And now prepare the balance sheet. Write the heading balance sheet as on 31st March 2021. Cash in hand, closing cash in hand, not opening cash in hand. To prepare the balance sheet, we had to see the receipt and payment account adjustment as well as the opening balance sheet. So here, while writing the cash in hand, we had to see the receipt and payment account. There will be given closing balance of the cash on the credit side, that is on the payment side. So see at the last, at the bottom, it is given by balance carried down 5,200. So that is the current year's cash in hand. So cash in hand 5,200. Then next is books. So there is adjustment for books. Record 28,000 in the inner column. Current year in the we have purchased 20,000 additional books, so add it, so it comes to 48,000, and there is a depreciation of rupees 3,800. Deduct 3,800, it comes to 44,200. Record it in the outer column. Then furniture, there is no change in the furniture, 16,000, so you record 16,000. And this year we have purchased another asset, that is the investment for 4,000. Record investment also. If there is any outstanding subscription in the current year, that is also asset. So in the current year there is a 800 rupees receivable. So that is outstanding subscription. Record it on the asset side. Outstanding subscription 800. Now come to the liabilities side. Capital fund. Opening capital fund is 47,600. Record it in the inner column. Then add current year surplus 14,400, and half of the entrance fee is 2,000, half of the donation 4,000, it comes to 68,000. And this year's outstanding rent is 600, that is liability, that is also to be recorded. And next year's subscription is received in advance, that has also be recorded on the liability side because it is a liability. So 1,600 recorded on the liability side. Then total both the side, so both the side it comes to 70,200. And the allotment of marks would be normally 6 plus 6. 6 for income and expenditure account and 6 for balance sheet. Now come to the question number 30. Question number 30 is about the admission of a partner. There are two partners, Suraj and Shrikant are the two partners. They were sharing profit and losses in the ratio of 1:1. It means equally they were sharing the profit and losses. And now they have admitted one more partner, Jairam. So and asked to prepare the revaluation account, partners capital account, new balance sheet. So draw the format. First of all, we have to record in the partners capital account opening balance of the partners. So in the opening balance of the capital of the old partners. So in the partners capital account by balance brought down, it is Suraj rupees 60,000, and then Shrikant rupees 40,000, and Jairam dash because he is a new partner, no opening balance of the capital. Then if there is a reserve fund, we have to distribute among the old partners reserve fund as per the old profit sharing ratio. Old profit sharing ratio is equal. So reserve fund is 15,000, so that we have to credit by reserve fund 7,500. And if after that we have to see what are the adjustment. So here Jairam is bringing 50,000 towards capital and 25,000 towards the goodwill, and goodwill has to be treated as per the accounting standard 26. So that amount has to be first credited to the Jairam's account. So therefore in the partner's capital account by bank account, Jairam's capital account credited by bank account rupees 75,000 rupees. So out of that 75,000, 25,000 is the goodwill. It is distributed among the old partners as per the old ratio. If sacrifice ratio is not given, it is distributed among the old partners as per the old ratio. Old ratio is equal. So therefore by Jairam's capital account in the column of Suraj 12,500 and in the column of Shrikant 12,500. And the same amount has to be debited to the Jairam's capital account. So therefore Jairam's capital account debtor to Suraj capital account 12,500 to Shrikant capital account 12,500. And thereafter some revaluations are done, so that should be recorded in the revaluation account. The first one is machinery is depreciated, so in the revaluation account on debit side, because it is a loss to the firm, it has to be recorded on the debit side. Machinery account, 10% of the 15,000 means it comes to 1,500. Then increase PDD by 4,000. There is an old PDD of 2,000, now increased by rupees say 4,000, means it was 2,000, now it is made 6,000, means it is increased by 4,000. That is increase in the loss, that should be recorded on the debit side. So 2 PDD 4,000 rupees. And then buildings are revalued 1,20,500. Earlier building was 92,000. Now revaluation is made 1,20,500. Means the value of the building is increased. It is a profit. So therefore recorded on the credit side. 1,20,500 minus 92,000. It comes to 28,500. So by building 28,500. Then total debit side and credit side. Credit side would be more 28,500. Record both this side 28,500, 28,500, find out the difference come to 23,000, and this is the net profit on the revaluation. It has to be distributed among the old partners as per their sacrifice ratio, that is equal. So therefore to old partners capital account, Suraj 11,500, Shrikant 11,500, and it has to be recorded on the credit side of the partners capital account by revaluation account, revaluation account 11,500, 11,500. And then we have to close the partners capital account. Total each partner's capital account, it comes to 91,500, 71,500, 75,000. Record on both the side. Find out the difference. The difference come to Suraj 91,500, Shrikant 71,500, and Jairam 50,000. Now prepare the new balance sheet. Balance sheet as on 1/4/21. So cash at bank, it changes because earlier there was a cash in hand 30,000 and now 75,000 rupees brought by the new partner. So 35 plus 75, it comes to 1,05,000. And stock, there is no change in the stock, 25,000. And debtors, there is adjustment, debtors 40,000 less PDD, new PDD means earlier it was 2,000, now it is increased by 4,000, 2,000 plus 4,000, it means it comes to 6,000. So debtors 40,000 less PDD 6,000, then the net debtors would be 34,000. Then furniture, there is no change, 20,000. Machinery, there is adjustment, 15,000 less depreciation, 1,500, it comes to 13,500. Then building revalued, earlier it was 92,000, so 92,000, now it is revalued as 1,20,500. Directly you can write 1,20,500, or you can write building inner column 92,000 plus 28,500, total outer column 1,20,500. Then patents, there is no change, 20,000, 20,000. And on the liability side, creditors 80,000, so 80,000, it is misprinted, now it is made 80,000. So creditors 80,000, bills payable 45,000, and reserve fund, there is no need of recording reserve fund because it is already distributed among the old partners. And then capital, closing capital of the all the three partners. So Suraj, it comes to rupees 91,500, and Shrikant 71,500, and Jairam 50,000. Total both the side, it comes to 3,38,000, 3,38,000. And the allotment of the marks would be 3 marks would be allotted for revaluation account, and for partners capital account 4 or 5, and for balance sheet 5 or 4. So they are just 1 mark here and there as per the number of days. Now question number 31 is on the retirement. Here also you have to prepare the revaluation account, partners capital account, and balance sheet. First we shall see the partners capital account. In the partners capital account, you record the opening balance of the partners. All partners are the old partners here. The opening balance of the capital, Raju 15,000, and then Arun 15,000, and Shambhu 15,000. And there is a general reserve, it has to be distributed among the partners as per the ratio of 3:2:1. So therefore by general reserve, it comes to 6,750, 4,500, 2,250. Then after that, goodwill of the firm. So I'll see the additional information. Goodwill of the firm is valued at rupees 18,000. Total goodwill is 18,000. Out of that, retired partner share is Arun share is 2/6. 2/6. So total goodwill of the firm is 18,000. So 18,000 into 2/6 means it comes to rupees 6,000. And this 6,000 rupees goodwill amount should be contributed, should be borne by the among the continuing partner, not old partners, continuing partners, as per the gain ratio. If gain ratio is not given, then the old ratio of the continuing partner itself would be considered as the gain ratio. So the old ratio is 3:1. So therefore gain ratio is also 3:1. If 6,000 rupees is distributed among the continuing partner Raju and Shambhu, it comes to 4,500 and 1,500. So therefore see here, Arun's capital account credited by Raju's capital account 4,500, Arun's capital account credited by Shambhu's capital account 1,500, and this amount has to be debited in the continuing partners account. See, in the Raju's capital account is debited to Arun's capital account 4,500, and in Shambhu's capital account letter to Arun's capital account 1,500. Then outstanding expenses is revalued to 3,500. Earlier it was 4,500, now it is reduced to 3,500. It is the profit for the firm, so record it on the credit side of the revaluation account. By outstanding expenses, 4,500 minus 3,500, it comes to 1,000 rupees. Then machinery and loose tools are to be valued at 10% less than the book value, means it is a loss to the firm. So therefore on the debit side, machinery 800, 10% means, and loose tools 400. And thereafter factory building are to be revalued at rupees 24,300. Earlier it was 22,500, so now it is revalued at rupees 24,300. There is an increase of rupees 1,800 in the factory building value, so therefore it is a profit. Record it on the credit side of the revaluation account. So 1,800 factory building. Now total credit side is more, 2,800, record on both the sides, find out the difference, 1,600, and this 1,600 has to be distributed among the all the partners as per the old profit sharing ratio. So two partners capital account, Raju 800, Arun 533, Shambhu 267. It has to be recorded in the partners capital account on the credit side. So by revaluation account, Raju 800, Arun 533, Shambhu 267. So now Arun is retired, first his account should be settled. So total his account on the credit side, it comes to 26,033. Record on both the side, find out the difference, and that difference should be transferred to his loans account. So Arun's loan account 26,033, and remaining partners capital account close. The total balance, the total of the credit side would be 22,550 in case of Raju, and to 17,570 in case of Shambhu. Record on both the side, find out the difference. It comes to Raju 18,050 and Shambhu 16,017. Then prepare the balance sheet of the new for as on 1/4 as at 1/4/2021. Cash at bank, usually in the retirement there will be no change in the cash at bank, so it is same 9,500. Then debtors, no change 15,000. Then stock, no change 12,000. Then building, there is a change. Earlier it was 22,500, now it is revalued 24,300. Then machinery, there is a change, 8,000 less depreciation 800, it comes to 7,200. Loose tools change, 4,000 minus 400 is the decrease, so outer column 3,600. Creditors, no change. Bills payable, no change. And outstanding expenses change. Earlier it was 4,500, now it comes to 3,500. And Arun's now new liability is Arun's loan 26,033 and capital of Raju 18,050 and Shambhu 16,017. So total both the side 71,600, 71,600. Here also allotment of the marks will be revaluation 3 marks, partners capital account 4 or 5 marks, then balance sheet 4 or 5 marks. Now question number 32. It is on the dissolution. Prepare realization account, partners capital account and bank account. Draw the format of the realization account, partners capital account, and then the bank account. First of all, record the opening balance of the capital of all the partners in the partners capital account by balance brought down. Here partners are Abdul, Babu and Chandru. So record the opening balance 40,000, 30,000, 20,000, and there is a reserve fund, distribute reserve fund as per their old profit sharing ratio. As per their profit sharing ratio, their profit sharing ratio is equal, so 12,000 equally distribute 4,000, 4,000, 4,000. And thereafter there is a cash at bank 6,000, record in the bank account on the debit side, to balance brought down 6,000. And after that, all the realizable assets except cash at bank and cash in hand, all other assets have to be transferred on the debit side of the realization account at their gross value. So 2 bills receivable, 2 debtors, stock, investment, furniture, building. And likewise, all the outside liabilities should be recorded on the credit side of the realization account. Creditors 12,000, bank loan 24,000. And then Abdul's loan is there, it is not the outside liability, it is the partner's loan, it has to be paid directly. So record it in the bank account on the credit side, just leave some space to record the payment of the other outside liabilities, just leave the space, then you record A's loan account 22,000. And thereafter here information is given how much amount is received from different assets, that we have to record in the bank account as well as in the realization account. Here cash comes into the business, so therefore we have to debit the bank account and credit the realization account. It is better to first record on the credit side because we get the list of the assets of the firm on the debit side in the realization account, so it would be easier to compare whether all the assets are sold or not. So therefore in the realization account on the credit side, write by bank account, in bracket you can write assets realized or assets sold. So from bills receivable, amount received is 5,000 and debtors 23,500, stock 18,500 and building 95,000. So see here 1, 2, 3, 4, 5, 6 assets are there, but out of that 1, 2, 3, 4, only 4 assets are realized. It means still 2 assets are there. So those assets either partners might have been taken or it might have been adjusted to the creditors. That information will be given to you in the problem. So here it is clearly given, investments were taken by the Babu and furniture were taken by the Chandru. So except investment and furniture, all other assets are sold. So from that we got these amount. So total the amount 1,41,500, and record it 1,41,500 in the bank account on the debit side, to realization account bracket assets realized 1,41,500. So after that we have to make the payment of outside liabilities, whether it is mentioned in the question or not. We have to mandatorily compulsorily it has to be paid So therefore, on the debit side, record two bank account in the bracket liabilities and dissolution expenses. Creditors full amount is paid 12,000 and bills receivable bank loan 24,000 and dissolution expenses 2,500 is given. So total 38,500. It has to be recorded in the bank account on the credit side. So on the top where we have some space is provided for that. So on the top you write by realization in the bracket the liabilities and the dissolution expenses are paid 38,500 rupees, and thereafter two assets are taken by the partners. So those partners capital account has to be debited. So therefore, partners capital account debtor to realization account. Babu has taken Babu has taken investment. So record 10,000 in his column, and Chandru has taken furniture for 8,000. So record 8,000 in his column. So therefore, Babu's capital account debtor to realization account 10,000. Chandru's capital account debtor to realization account 8,000, and the same has to be recorded in the realization account. Realization account credited by Babu's capital account 10,000. Investment taken, and by Chandru's capital account 8,000 furniture taken. Thereafter, you total debit side as well as credit side of the realization account, find out which side is more. So here credit side is more 1,95,500, record it on both this side 1,95,500, 1,95,500, find out the difference 3,000. So it is the net profit on the realization. It has to be distributed among the partners as per their profit sharing ratio. So two partners capital account A, B, C, or Abdul, Babu and Chandru 1,000, 1,000, 1,000. It should be shown on the credit side of their capital account by realization account 1,000, 1,000, 1,000. And now total, if you total A, B and C are Abdul, Babu and Chandru, it comes to 45,000, 35,000, 25,000, record on both the side, find out the difference. So that difference amount would be paid, refunded. So therefore, for difference we have to write to bank account. Abdul 45,000, then Babu 25,000, and then Chandru 17,000, and the same amount is recorded in the bank account on the credit side by partners capital account ABC 45, 35 and 17,000. Now total the bank account both the side would be same 1,47,500, 1,47,500. Here the allotment of marks would be for bank account they may allot 2 to 3 marks, and for partners capital account 4 to 5 marks, and for realization 5 to 4 marks. Then question number 33 is on the issue of the shares. So here the name of the company is Surya India Limited. It has issued 20,000 preference shares of rupees 100 each at a premium of rupees 10. So the amount payable is 20 on application, 50 on allotment, 40 on first and final call, and all the shares were subscribed and the amount is duly received except on 1,000 shares. So you pass the general entries for issue of shares as well as for forfeiture of shares, because those 1,000 shares are cancelled and reissued at rupees 90 each. So there would be 9 journal entries. So first one is for receipt of the application money, bank account debtor to preference share application account 20,000 into 20 rupees, it comes to 4 lakhs. Then second entry is for transfer of the application money, preference shares application account debtor to preference share capital account 4 lakhs. Then third is for allotment money due including premium. So the journal entry is preference share allotment account debtor 10 lakh to preference share capital account 8 lakh to securities premium account 2 lakh. And then fourth entry is for the receipt of the allotment money, bank account debtor to preference share allotment account 10 lakh. And fifth entry is for first and final call money due, preference share first and final call account debtor 8 lakhs. Then for receipt of the first and final call money, bank account debtor, preference share first and final call account 7,60,000, because on 1,000 share final call is not received, so therefore amount is decreased by 40,000. Now seventh is for cancellation of the shares, for forfeiture of the shares. The journal entry is preference share capital account, how many shares are cancelled, 1,000 into amount paid up is 100. So 1,000 into 100 is equal to 1 lakh. And then there is a forfeiture of the amount received so far. So here amount received so far is 20 rupees on application and 40 rupees on allotment. Total 60 rupees is received on 1,000 share. So that is credited to the special account, that is the forfeited share account. So therefore the credit forfeited share account to forfeited share account 60,000. And now we have to cancel the amount outstanding in the preference share first and final call account, that is the 40,000 rupees. So therefore credit the preference share first and final call. So the journal entry is preference share capital account debtor 1 lakh to forfeited share account 60,000 to preference share first and final call account 40,000, and the same shares are reissued at rupees 90 each. So the journal entry is bank account debtor 1,000 into 90 is equal to 90,000 rupees. There is a discount of rupees 10,000, so that should be adjusted from the forfeited share account. So forfeited share account debtor rupees 10,000 to preference share capital account 1 lakh. Then last journal entry for transfer of the remaining balance of the forfeited share account to the capital reserve. So journal entry is forfeited share account debtor 50,000 to capital reserve account 50,000. Out of 60,000, 10,000 discount is adjusted. The remaining balance of 50,000 is transferred to the capital reserve account. For each common entry there will be 1 mark, and for compound entry 2 marks will be. Then question number 34. Question number 34 is about the debentures. About the debentures. So here 4 different situations are given. For each situation you have to pass the 2 journal entries. First one is for receipt of the application and allotment money, and second one is for transfer of the money to the debenture account. Here situation A is 20 rupees 2 lakhs 10% debentures of rupees 100 each at par and redeemed at premium. So here debentures are issued at par, but it is redeemed at a premium of 5%. So 2 journal entries have to be passed. So therefore I have written A into bracket 1 for receipt of the application and allotment money. The journal entry is bank account debtor to 10% debenture application and allotment account 2 lakh 2 lakh. Then it has to be transferred. So the entry for the transfer is number 2. Second entry is debenture application allotment account debtors 2 lakh, loss on issue of debenture account debtor 10,000, because these debentures are redeemable at a premium of 5%. So therefore there would be a loss of rupees 10,000. It has to be transferred to the loss on issue of debenture account. So therefore loss on issue of debenture account is debited. Then to 10% debenture account 2 lakh, then 2 premium on redemption of debenture account 10,000. It is a reserve account, it is a provision made. So therefore 10,000 is credited to the provision account. The name of the provision account is a premium on redemption of debenture account. In case number B, here debentures are issued at a discount and redeemable at par. So the first journal entry for receipt of the application account, application and allotment money, the account, the journal entry is bank account debtor 1,90,000, 1,90,000, because discount of 5%. So discount of 5% on 2 lakhs, it comes to 10,000. So 1,90,000, 1,90,000 bank account debtor to debenture application and allotment account. Then second entry for transfer. So second entry is 10% debenture application allotment account debtor 1,90,000. Then discount on issue of debenture account 10,000 to debenture account 2 lakhs. Then C, situation C here, debentures are issued at premium and redeemable at par. So first entry is for receipt of the application and allotment account, bank account debtor 2 lakh 10,000, 2 lakh plus 10,000 premium. So bank account debtor 2 lakh 10,000 to debenture application and allotment account 2 lakh 10,000. And for second entry for transfer of the debenture application and allotment money to the securities premium as well as to the debenture account. The journal entry is the debenture application and allotment account debtor 2 lakh 10,000 to 10% debentures account 2 lakh to securities premium 10,000. Then last situation here, debentures are issued at premium and redeemable at premium. In both the case premium. While selling also we are taking the premium, and while buying back also we are giving the premium. So the journal entry for receipt of the application and allotment money is bank account debtor 2 lakh 10,000 to debenture application and allotment account 2 lakh 10,000. 10,000 premium you are taking. Now second entry is for transfer of the amount. First 10% debenture application allotment account debtor 2 lakh 10,000. Loss on issue of debenture account 10,000. It is a loss to company because premium is payable on the redemption. So it has to be debited to the loss on issue of debenture account. So therefore once again I will tell you, 10% debenture application allotment account debtor 2 lakh 10,000. Loss on issue of debenture account debtor 10,000 to 10% debenture account 2 lakh. Then to premium on redemption of debenture account 10,000. Then to securities premium account 10,000. So in this way you have to record the journal entry. Number 35. Question number 35 is on the comparative balance sheet, preparation of the comparative balance sheet. So here informations are given relating to 2020 and 2021. First of all, you prepare the format comparative balance sheet as at 31st March 20 and 21. So 1, 2, 3, 4, 5 columns are required. First column is particular, and second is for 2020. Third is for 2021, and then absolute increase and decrease, then increase and decrease in percentage. First of all, using the information given in the question, you write down all the information as per the format, as per the company's active. So there are 2 sections in the balance sheet. First section is the equities and liabilities. In the equities and liabilities, first heading is shareholders fund. In shareholders fund, first one is the share capital. So share capital in the 2020 4 lakhs and 2021 5 lakhs. So absolute increase is 1 lakh. And then reserve and surplus, it was 50,000 in 2020 and 60,000 in 2021. So absolute increase is 10,000. Then non-current liabilities are given. So non-current liabilities means secured loans are given. So non-current liabilities is rupees 15,000 in the 2020. Now it is 20,000. So there is an increase of 5,000. Then current liabilities 50,000 and now it is 70,000, increase of 20,000. Total for 2020 it comes to 5,15,000. For 2021 it comes to 6,50,000, and absolute increase or decrease it comes to 1,35,000. Percentage we shall calculate afterwards. Like with the asset side, first you write the assets. Out of that assets, first heading is the non-current assets. In the non-current asset, first one is the fixed assets. In the fixed asset, first one is the tangible asset, that is the building. It was 2 lakh, now it is 2,50,000, the absolute increase is 50,000, and machinery it was 1,50,000, now it is 2 lakh, the absolute increase is 50,000. And current assets, out of current assets, inventory 1 lakh, now it is 1,10,000, so increase is 10,000, and trade receivable it was 65,000, now it is 90,000, so increase is 95,000. And now calculate the percentage. To calculate the percentage, you have to take the absolute increase or decrease amount. So in case of first share capital, the share capital increase 1 lakh, and in the 2020 it was 4 lakh, so 1 lakh upon 4 lakh it comes to 25%. Likewise for reserve and surplus, absolute increase is 10,000 upon, in the 2020 the base is the 2020, so the 2020 in the year 2020 it was 50,000, so 10,000 upon 50,000 it comes to 20%. Likewise you calculate percentage for each item. So here 1.5 marks would be given for each item if correctly recorded, it properly recorded. Then question number 36 is about the ratios. So 6 different ratios are asked. You just first write down the formula, then fill in the figures and find out the ratios. First one is the inventory turnover ratio is equal to cost of revenue from operation upon average inventory. So cost of revenue from operation is equal to revenue from operation minus gross profit. Revenue from operation is 10 lakh minus gross profit is 2 lakh, it comes to 8 lakh. So inventory turnover ratio is equal to 8 lakh upon 1 lakh, it comes to 8 times. Then trade receivable turnover ratio is equal to net credit ratio, net credit revenue from operation upon average trade receivable. So net credit revenue from operation is 6 lakh upon average trade receivable is 1,50,000, it comes to 4 times. Then likewise trade payable turnover ratio it comes to 2 times, and gross profit ratio it comes to 20%, operating ratio comes to 90%, net profit ratio it comes to 10%. Now we shall come to practical oriented section. Here 4 questions will be asked, out of that you have to answer only 2. So question paper, question number 37 is you have to classify the following 5 items given into capital and revenue. So first item subscription is given, it is revenue. Second legacies, it is capital item. Third one government grant, it is revenue item. And fourth one computer purchase, it is capital item. And fifth one upkeeping of the ground, it is the revenue item. Then question number 38 is prepare executor's loan account with imaginary figure showing the repayment in 2 annual equal installments along with the interest. See here I have displayed on the screen, you just go through, remember it, and the same you can write in your examination. So there is no need of changing figure also. You have to just remember some figures and format, write the format and figures. Question number 39 is writing the pro forma of a balance sheet. So that also I have displayed. Just remember it and write in the examination if it is asked. Then question number 40, common size statement also, it is also displayed on your screen. Just remember it, practice it, and if it is asked in the question paper, you just you write the answer.